Welcome to Cortburg Speaks Retirement, an audio podcast about investing in the stock market, financial planning, money management, and retirement planning. Each Wednesday, we help investors at all stages of life learn how to potentially grow and preserve their money from first job through retirement. Now here's your host, Miguel Gonzalez.
Good morning and welcome to the Cortburg Speaks Retirement audio podcast. This week we're talking about required minimum distributions, specifically the 10-year rule about inherited IRAs and RMDs for those accounts. Here are the 10 things you need to know about the 10-year rule. Number one, the origin of the 10-year rule. The 10-year rule took effect in 2020 with the passing of the Setting Every Community Up for Retirement Enhancement, the SECURE Act. This legislation revamped many rules regarding retirement accounts, including RMDs. Number two, who the rule applies to. The 10-year rule primarily applies to non-spouse beneficiaries of individual retirement accounts, IRAs, and defined contribution plans such as 401ks, 403bs, and other employer-sponsored retirement plans. Number three, the purpose of the rule. The rule mandates that these beneficiaries empty the account by the end of the 10th year following the original account owner's death. This rule ensures that tax-deferred growth benefits do not extend indefinitely and that the government can reclaim some of its deferred tax money. Number four, no yearly RMDs. Under the 10-year rule, there is no requirement to withdraw a certain amount each year as long as the entire account balance liquidates by the end of the 10th year after the account owner's death. The beneficiary is compliant with the rule. Number five, tax implications. Withdrawals from inherited retirement accounts are subject to income tax, so strategically timing withdrawals to manage the tax impact is beneficial. For instance, spreading distributions over the 10 years could keep the beneficiary from moving into a higher tax bracket. Number six, exceptions to the rule. There are notable exceptions to the 10-year rule: surviving spouses, minor children of the account owner, disabled or chronically ill individuals, and beneficiaries less than 10 years younger than the account owner. These beneficiaries can take distributions over their lifetime, providing a potential tax benefit. Number seven, thing to know about inherited IRAs is the rule applies even if the account owner was taking RMDs. The 10-year rule applies regardless of whether the original account owner had started taking RMDs. It eliminates the previous rule that allowed non-spouse beneficiaries to stretch RMDs over their life expectancy. Number eight, multiple owners means multiple RMDs. So remember that if you have an inherited retirement account from multiple owners, each account has a 10-year distribution period that begins on the date of each account owner's death. Number nine, 10-year rule and Roth IRAs. One exception to the 10-year rule is Roth IRAs. Even though non-spouse beneficiaries must liquidate inherited Roth IRAs accounts within 10 years, they do not face the same tax implications because qualified distributions from Roth IRAs are tax-free. And number 10, the rule is still evolving. The IRS still needs to issue complete guidance on how exactly the 10-year rule may apply due to the changing presidential administration and possible revision of the tax code. Consult financial and tax professionals to help navigate this complex area. But in conclusion, understanding the 10-year rule for required minimum distributions can significantly impact one's retirement planning and wealth management approach. As with any financial matter, seeking professional advice tailored to your individual circumstances is critical. While the landscape may seem intricate, comprehending this rule can provide clarity, leading to well-informed and beneficial financial decisions. Make sure to visit our website, www.cortburgretirement.com. Our site is filled with educational videos, ebooks, publications, and financial calculators designed to help you learn more about your finances. as you search our site. Send us a note regarding any questions you may have about any particular investment concepts or products, and we will get back to you quickly with a thoughtful answer. This is Miguel Gonzalez, Certified Retirement Counselor and Managing Partner with Cortburg Retirement Advisors, signing off for this week's educational podcast.
The opinions expressed and material provided are for general information and should not be considered a solicitation for the purchase or sale of any security. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Securities offered through LPL Financial. Member FINRA SIPC. Investment advice offered through Private Advisor Group, LLC, a registered investment advisor. Private Advisor Group, LLC, and Cortburg Retirement Advisors, Inc. are separate entities from LPL Financial. Investing involves risk, including possible loss of principal.